So hello everyone, welcome back to RBI Grade B Crash Course Batch 3. So now we will again continue with our remaining session which we saw yesterday. Factors which hampering, okay, here it is hampering. So factors which are hampering RBI autonomy. So what does this word means? RBI autonomy means what? It's very simple, try to understand. मैंने कल ही ये आपको बताया था. See, government is there. Earlier, RBI was a private entity. Okay. Then what happened? RBI came under the Ministry of Finance. Okay. And now, after nationalization also, we have seen that RBI is an government entity. Considering that, now you would have seen in various current affairs, various news that RBI and government are always into tussle when it comes to maybe the autonomy of the RBI, and autonomy in the sense how it affects the monetary policy, how it affects the overall fiscal policy of the government and monetary policy of RBI. So first thing is that government tries to control over RBI through colonial era provisions. Now why government does it? It's very simple. See, government looks after the fiscal policy. Okay, they are looking after budget, they are looking after spending. And now that spending would be automatically dependent on the how much money flow is there by RBI. So therefore government always tries to control RBI as an institution or organization in a way that they would be able to spend more. They would be able to have money with them more, which they can use for developmental works or maybe for various social sector schemes. Now that is the reason why always government tries to control RBI as its own arm or institution. But always remember, RBI being an apex regulatory body as well as supervisional body, it's an apex institution of financial as well as banking institutions in the country. Considering that there is also a sacrosanct autonomy which has been given to the RBI, in the sense RBI को उतना independence दिया गया है और उतनी autonomy दी गई है that it can take decision on its own. Best example, Monetary Policy Committee, look at it, 3 people from government and 3 people from RBI only. So automatically your well balance is maintained in such a way that autonomy and independence of RBI always maintains. But how does government controls RBI? That we are going to see. And the first thing is that these are the colonial era RBI Act 1934 sections through which always government tries to control the RBI. Now this is very important, because for example, if you go through the newspaper, if you go through the overall from 2012, from Raghuram Rajan, Urjit Patel, these are the ex-RBI governors. See, Raghuram Rajan, he was an economist, and during his reign, always RBI was locking its horn with the government. Then came his predecessor, his junior, his apprentice, that was Urjit Patel. Urjit Patel also initially was working along with the government, in tandem with the government, but then he also locked his horns based on the stance of RBI, which was that stance of the RBI was not taken well by the government, or it was repulsive for the government. And then you see that both of these governors, they left their positions, and then comes Mr. Shaktikanta Das, who already is an IAS officer. That means he is the part of government, and that is why you see now this RBI against government conundrum does not exist. But again, this doesn't mean that the independence or autonomy of RBI is compromised. So let us see what are those colonial era sections which help government to control RBI. So Section 30 of RBI Act of 1934, it allows government to supersede RBI's central board. So you all would be knowing about RBI would be having a central board, members of the central board, a chairperson who would be deciding total organizational work, decisions, etc. Now, once you consider this, then you will understand that yes, overall Section 30 can give government power to override the decisions or supersede this RBI central board. This RBI central board is also called as the brain of RBI, which takes all the decisions. Now considering that, definitely it helps to supersede the RBI as an institution. Now this makes RBI as an actually arm of a government. But is this true? No, it is not true. So considering this, So considering this, here we can see that RBI definitely acts as an arm of the government, which is not exactly true. If you see, only it is from section 30. Then comes section 58. Remember one thing, very important. Always write down such important points. Section 30, what does section 30 means? Section 58, what does section 58 means? It is not only helpful for your objective questions, but also helpful for your descriptive questions. Okay, remember that. It limits the central board's power to make regulations requiring prior approval of the central government. मतलब हम जो decision कर रहे हैं, whatever decisions we are making, we have to ask government first. Don't you think this is something subordinate position of RBI to the government? Again, section 58. Then comes section 7(1), which permits union government, the central government, to direct RBI after consulting with the RBI governor in public interest. So, under the name of public interest, they can tell that print more money. Under the name of public interest, they can tell that give government more money. In this way, definitely, government always try to supersede RBI in this way. Okay, I hope you get it. Now comes factors which hamper the RBI autonomy. What are the factors? Let us see. First is influence of the RBI governance. In the sense, how governance of RBI is actually influenced. First thing is RBI governance. Since independence after 1947, 7 out of 10 RBI governors have been former finance ministry officials. As I told you, part of Indian government. So, already if a person is in government, already he was a part of government. He later retired, or maybe later after being a minister, now if he is a governor, always he will be taking side of the government only. Am I right or wrong? So here is one of the important aspects to look at. Out of 10 RBI governors, 7 are former finance ministers. Okay. Next, this raises also the concerns of the RBI functioning independently. Simple si baat hai. If an organization is such a important and of such a important stature, if the chairperson is elected from the state government or the officials of the, from the government or the officials of the central government, then definitely we can say, yes, it is affecting your overall autonomy. Sir, was demonetization decision was taken through the section 7? Yesterday's PDF and these ones, don't worry, today all the PDFs would be uploaded, no worries. Karthik Sharma, yes, you are correct. Section 7 was used for demonetization. Certain such decisions, whatever are there related to fiscal policies, related to monetary policies, related to printing of money, always section 7 is one of the weapon which is used by government under the garb of their personal intentions or any government's work which it wants to do. So always remember that section 7 is also called as that section which has to be removed actually, because under section 7(1), okay, of RBI Act of 1934, Supreme Court has also said in its judgment that under public interest, tomorrow you will say RBI do anything. But this will not be substantial for RBI to do it, looking its overall stand, RBI overall its monetary stance, fiscal stance. The central bank has to be strong as an monetary institutions as well as an fiscal institution. Considering that under public interest, every time government cannot bring this weapon and always point out RBI that do this, do that under this public interest. This is what Supreme Court had said. Okay. Next. Factors which are hampering RBI's economy. Again, next factor is government influencing on lending and surplus transfer. The most important aspect the government is always fighting against RBI is simple. मुझे पैसा दे दो. Give me more money. Simple. So lending rules. The government often requests RBI on to ease the lending rules under its prompt corrective action framework. This is intended to help MSME and power companies by making credit more available to them. What is prompt corrective action? Can anybody tell me in the comment section? It's very simple. Prompt corrective action is nothing but a preemptive attempt so that whatever overall credit is there in overall banking institution, that is flown in a proper, transparent and accountable way. Okay, we will see this more in our next lecture. Right now I will not discuss this prompt corrective action. First we have to learn what NPAs are, then we have to look at what bad banks are, and then you will understand what prompt corrective action is. Abhi agar hum iska discussion start karenge, it will again take a lot of time. It is nothing but prompt corrective action. मतलब क्या होता है? Simple. If you are making any mistake, then again RBI will come and it will try to rectify the mistake through this prompt corrective action. Okay. Next. Now here That is what, so here the point comes, to undermine RBI's efforts to manage the non-performing assets. What happens is that banks as an institution, they are always after taking the accounts as saving accounts and giving the loans or credits to the people. Now what happens if banks, whatever loans they are given, those loans are defaulted, people are unable to repay it, or maybe are the perpetrators who are not repaying the loans. Okay, so such defaulters, okay, such defaulters will cause most of the loans of the bank to be not repaid. Okay, so therefore this repaying of the loans will be affected, and this results into good loans, as loans are assets to the banks, and the saving whatever funds or saving whatever bank is having, those are liabilities. So whatever loans and credits bank are given, these are assets. But what if people are not able to pay the loans, or they are purposely not paying the loans? Okay, that is being offenders and therefore not paying the loans. Then at such time, the loans which are not repaid at time, these get converted into stress assets, and from stress assets, those are converted into non-performing asset. Now this non-performing asset, in the sense what? It was simple. A bank gave certain amount of loan, maybe of 10 lakhs, and this 10 lakhs, whoever took the loan, he was not able to pay the principal amount also and the interest also. Now bank will suffer. Bank has given the money, but nothing it got in return. So at that time, now bank will require some money, right? So at that time, through prompt corrective action, RBI comes and always helps in the recapitalization of the banks. This is through prompt corrective action. मैंने थोड़ा सा अभी बता दिया. In next lectures we will see it in depth. Now RBI surplus transfer. So first thing is lending rules. So what does government forces? गवर्नमेंट फोर्स करता है कि ये प्रॉम्प्ट करेक्टिव एक्शन यू यूज इट एंड यू actually manage these non-performing assets of different banks. So what government wants is that more and more credit facilities and loans are available to the people in such a way that production increases in overall economy. RBI surplus transfer is nothing but pressure to increase RBI surplus transfer to the government, which has impacted RBI's economy. These are the 2 points which you can remember. 2012 Raghuram Rajan's era of being RBI governor and Urjit Patel's era of RBI governor. RBI surplus transfer was nothing but government was asking the surplus transfer to the government. Okay, so what was government saying was, RBI is such a profitable institution. Out of total amount or total money which you are earning, total receipts which RBI is getting, receipts in the sense paisa kitna andar aaya, how much money came inside the institution, only 1/7 part is actually the expenditure, the spending amount. That means profit you are having 6. For example, if 7 crore, just example, RBI is earning, only 1 crore is the expenditure, 6 crore profit. Of this surplus, what are you doing? You are just keeping with yourself rather than transfer it to government. So during Urjit Patel's era, during Raghuram Rajan's era, this is the thing were happening, because both of these governors were saying, no, we cannot do that. For the stability of the institution, as important as RBI, we require this surplus to be kept at the RBI only. Tomorrow there may be an economic crisis. Tomorrow there may be NPS. Tomorrow there may require recapitalization of the banks. It is very, very important that we need this fund. But government was saying that leave about those times. We need money to spend it on the economy. RBI used to say, you will spend on the economy, and who has to manage the inflation? Then we have to manage the inflation. This is not the proper planning of fiscal as well as monetary policy done in the country. So therefore Raghuram Rajan said no. Therefore Urjit Patel said no. Both of the governors then were locking their horns with the government, and as you see, both of them resigned, right? Then came Mr. Shaktikanta Das, and now he's doing fine. He's already a part of government. I think that is why their both ways are going proper. I hope I told you a story to understand what these two things are very, very important. Why does RBI and government comes against each other? What do both of these want? What are their vested interests? Some key facts about RBI, very simple. First governor कौन थे RBI के? Osborne Smith, who was the first Indian person to serve as the governor. It was in 1949. C.D. Deshmukh from Maharashtra. Okay. Former Prime Minister Manmohan Singh also has served as RBI governor. RBI का emblem क्या है? Tiger and palm tree, which comes from the moher. Moher means what? A coin of East India Company. East India Company. Earlier on that moher, a lion was there, but that lion was removed, and automatically tiger and palm tree was. Why the lion was removed? Simple. Rather than having a lion, that animal who has no relation with the country, but where tiger is our national animal, therefore lion was replaced by tiger. The tiger represents the strength, courage, valor of overall RBI and its stance in managing the overall Indian economy. The palm tree shows the overall expanse, the vitality. Okay, that is what palm tree shows. RBI's fully owned subsidiaries. Let's understand subsidiaries in the sense what? It's nothing but subsidiaries. Subsidiaries. Sub means what? These are the organizations which are under RBI doing certain functions which are dedicated to them. First is Deposit Insurance and Credit Guarantee Corporation. If you give 5 lakh rupees in a particular bank as a saving, tomorrow if bank run happens, if the bank fails, you will get certain amount of money in return. Your whole money will not be eaten by that bank. That is assured by Deposit Insurance Credit Corporation, Credit Guarantee Corporation. Bharatiya Reserve Bank Note Mudran Private Limited, BRBNMPL, ये करती है आपकी printing. Reserve Bank Information Technology Private Limited, it looks after all the digital payments. Indian Financial Technology and Allied Services, IFTAS is also very important, looks after the financial technology. These are all the subsidiaries. Remember them. You can Google search also what are their important 2-3 functions, very important. Next, other key facts, if you are looking at the currency note printing presses. You should know about basic printing presses. Currency notes are printed at 4 locations only in India. These 4 locations are, एक है नासिक in Maharashtra, second is Devas in Madhya Pradesh, third is Mysore in Karnataka and Salboni in West Bengal. Nasik and Devas presses are owned by Government of India. Remember this, very important. Whereas Mysore, Salboni are owned by RBI through its subsidiary, as I told you, BRBNMPL. So 2 by government, 2 by RBI, that's it. Then, now what about the coin minting? Coins are minted at 4 locations. Simple. Mumbai, Hyderabad, Calcutta and Noida. Noida is very important. People forget it. Okay. Now, whatever coins are minted, those are owned by government. Okay. Those are owned by government and denomination limits are there. What do you mean by denomination limits? Simple. According to Indian Coinage Act of 1906, coin can be issued up to denomination of 1000 rupees only. 1000 ke upar you cannot say a coin can be printed. Recently, when 90 years of RBI, इसी साल पे हुआ है, that is why I am spending so much time on this particular lecture. Sir, is posting of RBI Grade B happens in these subsidiaries? Listen to me very carefully. You join as an RBI Grade B officer. You join as a manager directly because it's a RBI Grade B post, not A. Once you become a manager, then you again go through B. As RBI Grade B post is there, you go to Grade C, you go to Grade D, you go to Grade E. And at that time, when you are at Deputy Governor, that time you get an opportunity that you can even lead a particular subsidiary of RBI. Initially, when you will join as a manager, that is B position, C position, D position, you will always be in the departments, different departments of RBI only. Once you go at higher position, then you get an opportunity to lead, to become the chairperson of the subsidiaries. I hope that we are clear. Don't worry, if you are having any of the doubts, you can ask those doubts on our the groups also, as well as discussion forum. Okay, these whatever classes are there, initial 1-2 classes, these are for all which are open on YouTube also and open on our paid platform also. So therefore, don't worry, and I am trying my best to solve all of your doubts. Okay, so 1000 rupees only, till that you can print the coins. RBI Act of 1934 allows currency notes to be issued up to denomination of 10,000. In the sense what? Note जो रहेगी आपके जो currency notes होते हैं, notes, those only would be denomination up to 10,000. Coins up to 1000, denomination the currency up to, or notes, coins up to 1000 and notes up to 10,000. 1 rupee note is unique because the signature is of Finance Secretary. I already told you why it is by Finance Secretary, because coins are minted by government only, not RBI. All other currency notes are signature of RBI Governor. Why? Because it's very simple. The currency notes which are there, they don't have their intrinsic value. It's nothing but a paper. It's nothing but a paper. 100 rupee note, 1000 rupee note. If you go to a vegetable vendor and give that note, why does it work? Who has told you that this note has a value of 100 rupees? RBI has told you. So the government backs this paper through RBI that tomorrow people can exchange this piece of paper as an 100 rupee. And who guarantees it? RBI governor through his signature. If tomorrow his signature is not there, then who will guarantee it? Tomorrow if all of the India actually doesn't accept my 100 rupee note, then what will I do? So I can go to RBI governor and tell to him that, look, you have signed here, so you owe me this 100 rupees. This is what it means. Okay, I hope you understand. So here we ended our remaining part of our first class. Now we'll be looking at the rest of the class, and that class is, of course, which is that class? Yes, guys, we are now jumping towards the next section, that is functions of rest of the regulatory bodies. We completed RBI, now we are going to the rest of the regulatory bodies. So RBI, functions of Reserve Bank of India, done. Now banking system in India, in which we will be looking at the functions of the different financial institutions and regulatory bodies. Let's move that. We'll start with NABARD as an organization. Now let's go to NABARD and try to understand what does NABARD means. So simple, NABARD is nothing but National Bank of Agriculture and Rural Development. People think that it is just a developmental bank, but I don't agree to this. NABARD is not a bank. Always remember, NABARD is an rural development and financial institution. It is not a bank. Okay, always remember, because the main function of NABARD is not to finance the consumers or the institutions, but rather it is to refinance the banking institutions. It focuses on advancing financial inclusion and rural prosperity. Apart from refinancing, it also looks at developmental roles, also provides financial inclusion, rural prosperity through credit availability, etc. I hope you understand. Concentrate on what I'm saying, because I say those only things which are very, very important. Is this crash course free on YouTube? No. Only first 3-4 classes are free for YouTube. Rest of the classes would be in the paid class. Always remember. This is only promotional thing so that you understand what quality lectures we are trying to bring it to you. Next. Now, when we look at NABARD, as I told you, significance of this institution is very simple. Credit availability, loans to the agricultural farmers, for rural development. Not only that, providing loans to the rural people in the villages. That is what NABARD looks after. Second thing, to address critical aspects of Reserve Bank of India. Here, always remember, how does NABARD's formation took place? Which was the committee which recommended the formation of NABARD? It was Sivaraman Committee. Okay, it was Sivaraman Committee. So before NABARD, who used to take care of this? So always remember, RBI had a department which looked after the care of the rural development and agriculture. Later, the Sivaraman Committee, that is Committee to Review the Arrangements of Institutional Credit for Agriculture and Rural Development. Sivaraman Committee is also called as CRAFICARD. On March 30, 1979, they gave the recommendation of institutionalizing a separate organization which would be different from RBI. And then we could see in 1982-84, almost we saw NABARD institutionalizing and becoming a full-fledged organization. Here you could see the committee is called as, was led by B. Sivaraman, that's why it is called as Sivaraman Committee. Parliament approved the creation through the Act 61 of 1881. NABARD began its operations in July 12, 1982, as I told you. Always remember, the main function here you could see, it took over the agricultural credit function of RBI. RBI had a department which was called as ARDC. So earlier, RBI had ARDC under its garb. ARDC was nothing but Agricultural Refinance and Developmental Corporation. B. Sivaraman Committee came and it recommended remove this ARDC and form a new institution which is NABARD. And that's how the story of NABARD begins. It is fully owned by government, understand this. Okay, main thing is it's very simple. It's an developmental bank of the nation which fosters the rural prosperity. This is the main vision of NABARD. Next, if you see organizational structure of NABARD, very simple. It has board of directors who are appointed by Government of India. Now let us see who are the members of the board of directors. First thing is the chairperson. Okay, chairperson, the head. 3 directors with the expertise in rural economics, rural development, cottage industry, small industrial. So whatever rural economy is there, a person expert in rural economy. 3 directors from the Reserve Bank of India, then 3 directors from the central government, then 4 directors from the state government, then elected directors from shareholder other than RBI and central government, elected in the sense which are elected in a different way, and then is managing director. Always remember that the chairperson and other directors except the ones of the central government are appointed by the central government in consultation with RBI. Always remember, NABARD's supervision and regulation is seen by RBI, but NABARD is not an arm of RBI, it is directly owned by government. Here you could see the board of directors is there. Who are there? Again I will repeat, chairperson, 3 directors expert in rural economics, 3 directors Reserve Bank of India, 3 directors central government, 4 directors state government, some elected governors and some managing directors. That's it. Functions, what are there? Simple, financial. It looks after refinancing. What does refinancing mean? Let me explain. This is a rural cooperative bank named Divya Gramin Bank. So what is this? This is an RRB, okay, regional rural bank, Divya Gramin Bank. Divya Gramin Bank is giving loan to the farmers in that particular district or that particular village. Now what happens is that, always remember, Divya Gramin Bank will try to give its loan maybe to the overall population of that district. Divya Gramin Bank will also try to give the loans to maybe home loans, car loans, education loans. If the returns of these car loans, education loans is higher, then why will Divya Gramin Bank will be having more initiative to give agricultural loans? From where will be the funding, extra funding coming from to give the loans at lower or cheaper interest to the farmers, so that farmers are also in the profit, loan is also properly dispersed to the farmers? How this is possible? This is possible through NABARD. So NABARD comes as an organization which gives loans to the banks, so that those banks can use that loan to give loans to the farmers. This is called as refinancing. Fine. Here farmers are financed by the rural banks, cooperative banks, regional rural banks, the overall rural banks, and rural banks are refinanced by the NABARD. So this is nothing but refinancing. I hope you understand. Many people don't know what refinancing is. I hope you understand now. Then is developmental. Always remember, NABARD has responsibility in the rural areas to look after designing, implementation of developmental schemes. It may be construction of dams, roads, tunnels, maybe bridges, training handicraft artisans, small MSME workers, small industries, watershed development, sustainability and climate proofing, etc. Whatever small regional rural constructional things are there, everything. Overall agricultural sector, whatever falls into the agriculture sector, that also is overseen by NABARD for development. And then comes supervision. Always remember, whatever in India cooperative banks are there, regional rural banks are there who look after the regional areas, agricultural loans, their supervision is done by NABARD, not by RBI. Okay. And then here licensing of the branch opening for such RRBs, cooperative banks is also again done by NABARD only. I hope you understand. Now what are the financial functions of NABARD? Let us look at. First is short-term loans. What are short-term loans? NABARD tries to extend the crop loans. Crop loans in the sense, whatever crop for doing the kharif cropping, for doing the rabi cropping, for doing the plantation, whatever loan is required, those is given to the farmers through the cooperative banks and regional rural banks, which is indirectly given by NABARD for a short term. So agricultural loans generally are given for kharif loans, that is for kharif season only, rabi loans as in rabi season only. So these are short term, only for that period. This is so that we can support the farmers and actually reduce their risks because of the climate instability and invariable monsoon. I hope you understand. long-term irrigation fund, that is called as LTIF, that is initially 20,000 crore was given at the start in 2016-17. Today, here you could see 99 mega projects are there to enhance the agricultural productivity. Here NABARD gives the loan for long term, maybe for 2-3 years, 4, 5, 6 years, in such a way only for irrigation, that is water availability through the pumps, through the large reservoirs, etc. Then is Pradhan Mantri Awas Yojana Gramin. NABARD also supports the housing for, and here also refinancing is done for scheduled commercial banks and RRBs under this Gramin Yojana. I hope you have seen Panchayat, you will understand Pradhan Mantri Awas Yojana better. Okay. Next is NABARD's other financial initiatives. Warehouse infrastructure fund. Whatever farmers are there, where will they store their grains, considering that the shelf life of their vegetables, of their fruits is very, very less. Created in 2013, the initial corpus was 5,000 crores. Today, WIF provides loans so that the scientific warehouse infrastructure are constructed and their agricultural commodities are stored. Rural Infrastructure Development Fund, that is RIDF, set up in 1995-96. RIDF supports rural infrastructure projects through funds provided by NABARD. And then comes NABARD Infrastructure Development Fund, that is NIDA, designed to complement this rural RIDF, Rural Infrastructure Development Fund, which supports the structural infrastructure development. Last is Producers Organization Development Fund. Producers organization in the sense those who are producing. That means initially if you see the corpus 50 crore was provided. Here different producer organizations and primary agricultural credit societies. What does PACS means? These are nothing but at village level. Primary agricultural credit societies are those small financial and banking institutions. These are not banks, but these provide small term, short term and small credit facilities to the farmers and to the overall farmers. Whatever produce is there, from that produce, those who are manufacturing it into a final product, for them the loans are provided in packs. Okay, so here also these are your overall funds which are very, very important, which provide enough sum. Warehousing, that is Warehouse Infrastructure Fund. Rural Infrastructure Fund for the rural developmental projects. The NABARD Infrastructure Assistance Funds, which assist the Rural Infrastructure Development Fund, and Producers Organization Development Fund, that is for the overall production of different agricultural products. Then it's supporting rural enterprises. Rural enterprises, organization, small industries, how they will support. Producers Organization, it is a legal entity of the primary producers such as farmers coming together, milk producers coming together, fishermen coming together, craftsmen, even potters coming together. Whatever rural people are there who are trying to survive their or trying to earn their income through the small rural skills, they are the important parts of this particular enterprise. Okay. Second is Primary Agricultural Credit Society, as I told you, smallest cooperative credit institution in India. It operates at grassroots level. Okay, gives credit to the farmers in terms of loan, recovering post-harvest, etc. Long-term loans are given by NABARD only for at least 18 months to 5 years. These are actually for both farm as well as non-farm activities. But these are specially for and macroscopic projects like reservoir, dams, construction of bridge, construction of huge landfills, construction of lakes, etc. Then comes SEBI. SEBI notification is out. If you are a RBI Grade B aspirants and if you think that you can also try for SEBI, we have already launched a crash course. You can definitely check it out. Now SEBI, Securities Exchange Board of India. Always remember, before SEBI, who used to regulate the capital market and overall the shares which used to take place? That was Controller of Capital who used to issue the regulatory authority and look after the checks on the overall capital market. SEBI was established in 1988. It acted initially as a capital market regulator by Government of India resolution. It is that organization which keep checks that proper transparency and accountability is there when people are actually investing in the share market. Bombay Stock of Exchange, National Stock of Exchange, everything comes under the SEBI. Sir, are the interest rate for RRB decided by NABARD? The interest rate here are not decided by NABARD, but always remember 7% interest rate if it is there, then 3% extra subvention of interest is given by NABARD. Okay, so you will understand it. Then comes formation of SEBI. 1988 it was formed as an capital market regulator. Autonomy and powers. It became an autonomous body on April 12, 1992 with statutory powers under SEBI Act of 1992. It became autonomous body in the sense, yes, again independent and autonomous, no one owns it. It is under government, statutory in the sense it brings its power through a law. Whatever power SEBI has, it is a very strong institutional body. It looks after transparency. Recently, SEBI had banned various YouTube creators who used to actually teach students or maybe give them hints that where they can invest. And thus, they used to try to do insiders trading. Okay, so insiders trading, illicit ways of using stock market and luring the money from the consumers. This is what they were doing. So SEBI banned them directly to do any transactions in the stock market. Functions, if you see, first is investor protection. SEBI always try to protect the investor's interest. We still remember the first class yesterday only which we did. As you know, if I am a person who is investing in stock market and tomorrow the whatever 10,000 rupees I invested in a 100 rupee share, if that 100 rupee share becomes 1 rupee, then what's the point? So here SEBI always tries to protect the interest of the investors who have invested in the securities market. Market promotion and regulation. Regulation is very, very important. SEBI works into complete security market regulation such that transparent and accountable processes are carried, no illicit means, no insider trading happens. Areas where SEBI deals, first is issuers, which provide marketplace for the issuers to raise the funds, that is putting the shares so that people should buy them. Investors, those are people who will see those shares and buy them. Intermediaries, who will create competitive market for intermediaries such as stock exchange, brokers and portfolio managers, who will be middlemen who will be looking at both selling and buying. Authorities and power of SEBI, very simple. It is having regulatory as well as judicial function. Judicial function of SEBI is quite different from RBI and NABARD. SEBI has ability to frame the laws, but at the same time, it also has ability to give the rulings as well as impose the penalties as it has judicial function. It can fine, for example, a YouTuber named Bap of Charts was there. It was fined in crores by SEBI because it was using illicit means to trap consumers and to give them fake information related to investment. Search and seizure. SEBI also has an right that it can request the information of any entity who has logged in or who has its overall detail in the securities transaction and securities market. This investigation is generally so that whatever money is flowing in the securities market, in the capital market, overall has to go through all the checks. Venture capital and collective investment schemes. SEBI registers and regulates venture capital funds, mutual funds and chit funds. What are mutual funds? These are nothing but multiple portions of shares coming together and forming one fund. What are chit funds? When many members coming together, pulling their money together, putting their money together and making one fund. Venture capital funds are nothing but those funds which are used by the initial, these venture capital funds are used, these initial funds from these funds are used as a seed fund for the various startups to start there. So funding startups which are getting, they get from venture capital funds. Securities Appellate Tribunal. So tribunal is nothing but a intermediate body which acts like a judicial body. So here established to protect entities aggrieved by the SEBI's decision. Tomorrow SEBI may give its various regulations and judicial penalties. Sometimes if any organization wants to appeal it, if it wants to go to the court, they can go to the appellate tribunal, that is SAT. Then comes SIDBI, Small Industries Developmental Bank of India, SIDBI. Established here, if you see, in 1990, main aim was to support small, medium, micro enterprises. Simple. Go in your village and see, there is an textile owner who is making the shirts. Go near a potter who is making various crafts of pottery. Both of these are different industries. Pottery industry, textile industry. Tomorrow, if they want to scale, if they want to expand, who will give them loan? So SIDBI is that organization who looks after growth and development of such organizations. Creation, here you could see 1990s it was created under the Act of Parliament. Headquarters is Lucknow, Uttar Pradesh. MSME sector development, here promotion, development, finances of MSME sector. Single window facility, if you see, aims to meet the financial needs of MSME to make globally competitive and customer friendly. Here the credit facilities to the small, medium, micro, small and medium enterprises. Coordination is nothing but here principal institution for coordinating functions of different organization, institution, industries coming together, providing them credits, as readily credits will not be available because of their financial condition at the regular banks, right? So here small, micro and medium enterprises get easy loans from SIDBI. They provide direct financing. So first form of financing which SIDBI does is direct financing, providing direct loan or credit. Indirect financing SIDBI does is by again refinancing the banks, as NABARD did, as I told you. Government agency role in the sense, always remember, it is a nodal implementation agency also, where it works with various ministries. For most important, Ministry of Corporate Affairs, Ministry of Commerce and Industry, Ministry of Food Processing and Ministry of Micro, Small and Medium Enterprises. It works with these three ministries and it tries to form a credit plan for whole of the nation. Not only that, it also looks after how much total credit requirement is there by the various rural areas, total rural population. Okay, and it tries to find a feasible solution through which easy credit facilities and loans are available for such institution. Then comes Insurance Regulatory and Development Authority of India. It is a primary body overseeing and fostering the insurance industry in the country. Insurance you would be knowing about. Health insurance is there, car insurance is there. Okay, insurance here, it's an autonomous body established in 1999 and it works independently. Location here you could see Hyderabad, Telangana, and primary goal is very simple. Whatever policy holders are there to safeguard their rights. I can take insurance for health, I can take insurance for my car, such that tomorrow if damage happens, there is an risk support to me, a financial support to me from my insurance policy. Regulations and registrations. It formulates the regulations, that means laws through which the policy holders are protected. Additionally, here also various insurance companies, whatever are there, Tata AIG, they can register and become insurance company and they will get an certificates that tomorrow they can start different insurance policies. Then people can buy those insurance policies. Simple. Now functions of IRDAI, protecting the policy holders, that is protecting their rights, their interest. If any grievance is there, then protecting that. Regulating insurance companies, whatever insurance companies are there, for example LIC, okay, for example Tata AIG, regulating them, keeping check on them, checking their regulations, that is also seen by your IRDAI. Then comes the most important organization for pensions. Whatever government officials are there, whatever your other private also these days of like employees are there, they can save their money from their overall earnings they have done during their service or during their profession, and that is nothing but pension which they can get after retirement. So Pension Fund Regulatory and Development Authority formed to oversee the pension sector in India. It is formed under the Project Oasis in 1999. Always remember it. It is to address the old age income security. When people get retired, they don't have income in hand and it can make them dependent. So rather than that, here whenever people retire, they can get excess fund which they have saved during their overall tenure of their service. Defined contribution pension system, it is nothing but a new pension system which was introduced for the new government employees. It excludes the armed forces and it replaces the old pension scheme. Establishment, if you see, an interim PFRDA was set up in August 2023-2003 under the government's resolution. PFRDA Act was passed in 2030 and came to effect in 2014. So now it is an again statutory body. Regulation, if you see, then always remember it regulates national pension system. Go to the website of national pension system. You can start, if you are an employee, you can definitely start your NPS. It includes employees from the central government, state government, private institutions, unorganized sector. Monthly you can put certain amount of money in this particular NPS. Either you can do it in phased by manner, or you can also do it on regular basis, and then after retirement you can have that money. Promotion of income security. Here PFRDA manages that after the retirement, old age income security is there for all the people who are either working in any of the organization, public, private, or any other. Then comes the functions of PFRDA, regulating the pension funds and protecting the subscribers. So first is developing pension funds such that they serve as the pools of money for the subscribers, protecting the subscribers through the protecting the interest of the individuals who have already who are already the part of the pension schemes and their money is already into the pension funds. I hope you understand. Then comes EXIM Bank, that is Export and Import Bank of India. This is also called as EXIM Bank. This is a top export financial institution. Those people are vested in the international foreign trade and who are having investment with countries' economic growth. Definitely they can take loan, credit facilities from EXIM Bank. Overall, buyer's credit, overall lines of credit, that is loan which is required, the funds which are required, they can get for this external trades, exporting, importing, that can be easily available through EXIM Bank. Establishment is done in 1982, fully government owned entity. Buyer's credit is nothing but a credit, okay, to a foreign buyer to purchase goods from India, facilitating exports. So here suppose for example Mark Zuckerberg is there in United States of America. If Elon Musk is there in the overall Canada, if both of them want Indian mango, but both of them are saying that I don't have money, Suraj, what we will do? So they can get EXIM, they can get loans from EXIM Bank and they can buy the goods from the India, which will again, now why EXIM Bank is giving the loan? Yes, because it will increase my mango production, because Elon wants it, because Mark wants it, and therefore here it facilitates the exports. Lines of credit. It is nothing but extension of the credit line to the Indian exporters to help them to the new markets. In the sense, whatever Indian producers are there, exporters are there, unko loan dena, giving loans to them so that they can use that funds to improvise, increase their production. Overseas investment finance, offering loan to the Indian companies for investing in the overseas joint venture. That means if two companies, one foreign company, one Indian company coming together, which is Maruti and Suzuki coming together, if they are planning to do a particular project in India as well as in Japan, China, then definitely here if a money is required, then here only Japan bank cannot help, only Indian bank cannot help. That's why here EXIM Bank helps in such situation. Services provided by EXIM Bank, simple research and analysis of the international trade, then investment, the risks which are involved in the trade, then export advisory services when you are doing the exports, what are the information and support required for the exporters to assess the risk as well as opportunities which are there in that particular domain. Marketing also here. If you are exporting, of course, your marketing should be proper, your overall product should be available in the overall foreign market, identifying opportunities, giving and establishing the projects in the abroad foreign nations. This is also what EXIM Bank does. It is not just a financial institution. And term deposit scheme, which provides the deposits for a longer duration and which also results into financial security and stability for such parties. Export Credit Guarantee Corporation, that is ECGC. It is previously also known as Export Credit Guarantee Corporation of India. Always remember that it was established in 30 July 1957 and the goal is again to boost India's exports only by again providing credit risk insurance and related services. So tomorrow, for example, I am an agricultural farmer, I am exporting my mangoes to the United Kingdom, to Canada, to America. And what happens is that tomorrow, if because of the quality of the mango, because of monsoon, if the quality of the mango is such that UK, Canada, America, nobody is taking my mangoes, but already I have spent a lot in producing the mangoes. At that time, in such risky situation, insurance can be provided by such ECGC. So here offers various insurance products to protect the exporters against credit risk. Not only that, supports bank and provides insurance schemes to meet the needs of commercial banks offering export credit, and then reasonable premium rates. It maintains the affordable premium rates for its services. Okay, so premium rates are nothing but providing proper lucrative interest rate for its optimum services. Okay, so second last is National Housing Bank. Now always remember, National Housing Bank is a national financial institution established in 1988. Okay, earlier it was an institution which was a statutory institution under National Housing Bank Act of 1987. It supported national housing financing for housing, for real estate. If loans are required, credits are required, so finance was given at local and regional levels by this particular institution. It was owned by RBI, but now it is no longer part of RBI. Affordable housing, it works to increase the availability of land, materials, housing in sustainable and cost-effective manner. Regulatory authority, it oversees different housing financing companies also. There are various private as well as unorganized financing companies for real estate loans, so it always look after that. Sir, are interest rate for RBI decided? Okay, that question is done already. Next is functions of National Housing Bank. So increasing housing availability, supporting the availability of buildable land and building materials, promoting mortgage lending, ensuring safe and affordable mortgage lending framework. So here try to understand, mortgages means are nothing but if you require a particular loan, then whatever your house is there, that you are giving as a mortgage. That you are going to a bank, you are telling, I am having a house of 2 BHK. You give me a 2 crore loans, and then there are different clauses. For example, maybe you can give this house on the lease if I am unable to pay the loan. Maybe you can sell this house if I am unable to pay the loan. So this is nothing but, mortgage is nothing but an immovable property which has been kept near the bank for the loan. Okay, so it ensures the safe and affordable mortgage lending framework. Many people are there who take loan by giving their homes, cars to the banks as mortgages, as leases. Okay, so वो गिरवी रखना जो कहते हैं ना, गिरवी रखना, that is your mortgage. So regulatory control is nothing but regulating the activities of the housing finance companies. Then comes the organization FSDC, Financial Stability and Developmental Council. Look at it very carefully. Here it was established. It was established so that stability is maintained in the overall Indian financial sector. What do you mean by stability and development? It's very important to oversee and look, is the overall financial condition in India stable, and are the overall financial stances, decisions going through in such a way that development is happening in the country. So first thing is, when it was created under Raghuram Rajan committee in 2008, it was recommended and established in 2010 by the Finance Minister Pranab Mukherjee. It is an inter-regulatory coordination and aims to promote the overall economic crisis. Always remember, whenever there are economic problems, financial problems, at that time FSDC comes into the picture. It recommends something. Also, it gives inter-regulatory coordination. For example, RBI, NABARD, SIDBI, you come together. This is a problem which has happened in this particular economic crisis. Try to solve this. This is what FSDC does. Leadership is nothing but it is chaired by Finance Minister. That's why it brings government, it brings various regulatory bodies together and tries to solve different economic financial problems in the country. It brings SEBI, IRDAI, RBI, Finance Secretaries, Chief Economic Advisors together on one platform. And then functions, if you see, first is financial stability, so that financial sector remains stable. Sectoral development, various sectors are there which are requiring development. You can take into example rural sector, you can take into example maybe housing, roads development, the roads or national highways, such whatever various sectors are there, it requires a specific more concentration or maybe more lookout. So that lookout is again given by sectoral development, which is again the function of FSDC. FSDC can make a report and submit the report to the respective ministries. For example, Ministry of Rural Development, give the report to that look into this particular areas, your rural development is not done properly. Give it to the Ministry of Roads and National Highways, give it to that. Okay, these roads are not constructed properly. So in this way, the sectoral development reports can be given to the respective ministries. Inter-regulatory coordination, bringing different organization institutions at one platform. Financial literacy is nothing but again bringing overall billion of population into the digitalization and under the overall financial literacy. How to use, how to do the payments. Financial inclusion is nothing but again promoting various digital platforms, various the financial instruments, holding bank accounts, okay, the zero balance accounts, the Jandan Aadhaar Mobile Trinity, providing all these things and bringing all the people under the financial umbrella. Macro prudential supervision, it oversees overall economy and functioning of large financial conglomerates. That means what it does, overall in economy, whatever other financial institutions are there which look after different areas with different functions, it brings them and tries to frame certain rules which will be very generic also and which all these organizations can follow for the financial stability. Very simple. Next, here we have ended functions of RBI, we have ended the functions of financial institution, and here first two chapters we have ended. Now let us see, not tomorrow but we will come day after tomorrow with your third chapter. Definitely, thank you very much. If you are having any doubts, again dashboard you can ask to the discussion forum, as well as I will try my best to solve all of your doubts. I will upload all the PDFs today. Okay, don't worry about it, don't get worried. In the classes it is very important that you should go through whatever lectures we are going through. Thank you very much and see you next time.